Good morning, happy Wednesday. Anthony Speciale here with Speciale Analysis, unedited and on the edge of the market. Today we are going to talk about PayPal. So many of you may have used PayPal, especially if you're an eBayer. eBay owns PayPal. Essentially, it was their platform for payment processing. So eBay is a worldwide online auction style business, and of course they needed some way for their buyers of their products, their sellers' products, to transfer money. So along came PayPal. PayPal has been around for quite a while. Really a great model, probably one of the very first consumer-friendly companies, for sending money or exchanging money for services and things of that nature. Listen, they've developed into offering e-commerce based programs and products and things of that nature. If you are running a small business and you collect income, or services, rendered services online, you can set up an account with PayPal and your customers can pay you through PayPal. You can also send money to your friends and family, and you can move money around the world and things of that nature. So it's really a pioneer of that industry before all these other smaller Venmos and things of that nature kind of came along. So, with that being said, during the COVID-19 sell-off, this company really excelled. The entire e-commerce business did, simply because people were home. And it was easier to buy and sell and render services and things of that nature from the comfort of your couch, because we were social distancing, which is what it is. But that's changed. Listen, the world is open for business, essentially. Maybe not every corner of the world, but I would say 90% of the world is open for business. Life has returned to some form of normalcy. People are going shopping and out to dinner and traveling and getting on planes and so on and so forth. So it's just a cycle that has really kind of gone through its cycle, and that's exactly what happened. So, but there is an opportunity on PayPal, and I want to talk about it today. I want to look at it today. There's 2 weeks worth of price action, which to me serve as an important statement that we're going to look at. So I'm going to open up the chart. We're going to dive right into it, and we'll see what the opportunity entails. So what you see in front of you is the existence of PayPal. So back in 2015, this company went public. And you can see we just literally roared our way up to the $300 handle over a period of time. Here is your COVID low. You can see. And, from there, this just really, aside from some hesitation, this basically went straight up. We made it a double top here, and then price has now fallen over. So I am looking, obviously, to an opportunity that we have today, and that opportunity exists, in my opinion, to the downside. Clearly, we're in a downtrend. Clearly, we're well below the 200-day moving average. Clearly, this market, is continuing to weaken, at least at the moment. But let me hone in on what I see. So here is our confirmation, this little red candle right here. So you can see price came and touched this structure here that was once support, and is now resistance. Price has failed to overcome that again. So my thought is this: since we did not trigger this upon this candle, and we are now looking to this candle, last week's price action did in fact test what is now resistance. It's confirmed resistance. It traded above it, but it did not settle above it. So as long as this holds, I would place my short order at 72.75, or if you want to even put it a hair lower, that's fine. But I would use my original entry here, because in case this pops up, we don't really want to partake in that. We don't need to take a loss. I'd rather confirm that it rolls over. So I'm looking for two structures to hold. One, the black structure that it initially failed against. And two, this descending teal structure. So I have resistance and resistance long before I get to my stop. So I have two resistance hurdles that would have to be overcome before this trade actually went bad. So it does still look, it is still a very viable setup. Again, this was our trigger, and last week's price action does show us that resistance is in fact active in the market. So my thought becomes, we come down to where we have measured our 1% buffer. We place a target at 57. That target continues to descend. Our risk continues to descend, meaning it gets smaller as time goes on. So next week, we really hit a convergence of resistance. Next week, our price action is going to run into where the black channel and the teal channel intersect. So this, one of two things is going to happen. Either it's going to hold and push price lower, or it's going to fail and push price higher. If we close above the teal and the black structure in this next coming week, then this trade likely goes bad. So my thought process is, if you're comfortable with not trying to chase it, I would place the sell order in the area where it's indicated 72.75, and this way price would actually have to start to fall in order for you to be entered into this trade. Sometimes it's better to not chase the price. If you let it come to you, it may not. So just keep that in mind. In this instance, if price does continue to travel higher, the reality is we're never going to get filled, we're never going to get stopped out, we're never going to lose any money. But if we sell it at where the current price is, and then the price goes against us, we are going to lose money. So that choice ultimately becomes yours. That is unique to your personal trade plan. Me, typically, I typically set wherever I set my parameters. That's typically where I prefer to enter my trades. Now, you may take this information and go use an option as a proxy to trading the stock itself, and that would be fine. I would probably look to $65 put option, expiration likely somewhere around October or November, and see if this works out. That's another option. Ultimately up to you, however you decide to do it. But I did find this opportunity. I was going through, I was writing a newsletter, and I was like, let me shoot a video about this. Let's talk about it. We're going to see what happens. Again, I'm not convinced, one way or the other. But with that said, the price action does look good. And again, if price does just run up from here, there's no need to chase it. I would let it come to you, and then let it fall through. If it doesn't, in fact, then that is what it is. And if it never comes down to our entry, then we never entered the trade. If we never entered the trade, again, we didn't lose any money. And that is ultimately the greatest objective, is to live to trade another day. And that is accomplished by losing the least amount of money and compounding the most amount of money along the way. So that's it for today. I just want to take a moment. I spotted this. I did an article about it. I wanted to share it with you. I thought it was important for just to honestly build your approach. There's a couple different ways you can handle this. I think I've covered them. Ultimately, what you do with it obviously is up to you. So I hope you found this informational. I hope you learned something. I hope this triggers some type of thought process that is valuable to you in the future. With that, I hope you have a great day. If you can do me a simple favor, and that is below this video, like, share, and subscribe so that others can find me and enjoy this content as well, I would greatly appreciate it. Otherwise, I will see you tomorrow.